The market cap or the total value of Bitcoins isn't that high. It's $1 trillion. So compared to gold that's 9 trillion or other asset classes that are even more, it means when people move money in and out of Bitcoin, it affects the price because there's not that much of it.
In 1837, Horace Mann created the education system, a system at the time designed to pump out factory workers and professors. The same system that is still being used today in the 21st century. Now, Mann's system is backfiring. We are being molded by the same industrial system that has existed for close to 200 years. That system delivers us into a digital economy that has no need of our outdated skills. This isn't our teachers' fault. This isn't the government's fault. This is due to a rapidly changing world full of technology and unforeseen circumstances. And us Gen Zs are caught in the middle. Welcome to the Driven Young podcast, the podcast for stressed, overwhelmed young Australians, teaching you practical life skills you can implement now to set yourself up in life. And now your host, Byron Dempsey.
Welcome back to the Driven Young podcast. And guys, I am so excited to announce today is my first ever sponsored episode. After 50 episodes, I refuse all sponsor offers as I'm super careful with what brands I want to work with. But this is how I plan to do my sponsors. Rather than do a 30-second ad read, I prefer to bring on the founder or CEO and learn about their story and provide as much value as possible. So, today I'm joined by Blake, the CEO of Bamboo. Bamboo is a micro-investments platform that allows you to seamlessly purchase digital assets like gold and Bitcoin. It is easy, secure, and effective way to participate in this growing asset class. All you need is a mobile phone and a bank account to get started. So at the time of releasing this episode, Bitcoin has been on fire and is a massive hot topic for young people, and everyone in fact. And everyone wants to know more about cryptocurrency. Tesla has recently invested $1.5 billion into Bitcoin along with some other major companies, hence why I wanted to bring on Blake and deep dive into Bitcoin and cryptocurrency. Today we get into how did Bitcoin originate? What is Bitcoin and cryptocurrency? How does it work? The opportunity crypto presents for us. Why is it so volatile? How can it go from 70k to 40k in 2 days? What is the difference between crypto and our current currency? Inflation explained, why Bitcoin is like digital gold, and so much more. If you are in Australia and want to get started investing in crypto, gold or silver, I highly recommend checking out Get Bamboo. They make it so easy for first-time investors to set up and start to dip their toes into the water. This is just as much a savings app as it is an investments app. Think of it like a digital piggy bank. You slowly put away money over a long period of time by rounding up to the dollar. So if you spend $24.50, Bamboo will round it up to $25 and invest 50 cents into Bitcoin, Ethereum, gold or silver, depending on what you choose. So if you want to start investing or create a better savings habit around your money, click the link in the description, sign up, plus you'll be helping me out supporting the show at the same time. I personally use this app and I've really loved it so far. As per usual guys, feel free to DM Blake or myself on Instagram if you enjoyed this episode. Make sure you follow me on Instagram along with Driven Young Instagram. Anything you need is in the link in the bio of those accounts and I will keep you updated there if you want to stay in touch. I should quickly mention this episode is not financial advice in any way, shape or form, as the information or advice given does not take into account your particular objectives, financial situations or needs. You should, before acting on the advice, consider the appropriateness of the advice, having regard to your objectives, financial situation and needs. Bitcoin is highly volatile, as we mentioned in this episode. We're not really giving any advice, we're just educating you around what crypto actually is because it's such a difficult thing to wrap your head around. Now, over to Blake. All right, Blake, welcome so much to the podcast.
Thanks, mate. Thanks for having me. Looking forward to it.
Really excited for this episode. We're going to be talking about crypto. Just put out a video on TikTok asking what people want to hear about, and a lot of comments are saying crypto. How do we, what is crypto? Because it's so hot right now. We got Tesla just invested 1.5 billion. We got all this stuff going on. So before we get into, I guess, what is crypto and that whole world, I'd love to know a little bit about your story, who you are, and kind of what you did after high school and what you're up to.
Yeah, for sure. So my background's in urban planning. I went back to uni and studied urban planning in Perth. I ended up studying in Sweden as well because I wanted to incorporate sustainability and work with smart cities. I could just see here in Australia there wasn't a very strong mandate for sustainability in our urban planning, in our urban design. So yeah, went over to Sweden, started studying, and I had a lot of problems with the banking sector. Like when I wanted to transfer money back to Australia or to friends in Portugal, I found it was expensive and really hard. And I heard about crypto, heard about Bitcoin for the first time, and that kind of piqued my interest.
When was this, by the way?
This would have been in 2015.
Okay, cool.
Yeah, so a little while ago. And yeah, so started buying some and playing with it. And yeah, kind of snowballed from there. So once I got back to Australia, I was lucky enough to get a research role and move over to China, doing sustainable urban planning. And again, that was in about 2016, 2017. And I noticed that there was a strong interest in crypto at that time, particularly from the Chinese, because they have quite strict controls around what they can do with money. It's very difficult to move capital outside of China. So people were turning to crypto as a way of moving that money freely and easily without government restriction. So I noticed that there's quite a strong demand in China at that time. So I started buying crypto from Europe and America and then selling it on some of the Chinese exchanges for a little profit. And I didn't know that this type of trading even had a name, but they call it arbitrage trading. But at the time I was just doing it because it was fun. I was learning about the technology. Back then, I think Bitcoin was a few $100s and Ethereum, was barely existed, which is two of the most prominent cryptocurrencies. So that was a bit of fun, but then things got a little bit hairy. The Chinese government put a ban on cryptocurrencies. They were looking at ways of regulating it better. So they put a pause on trading, so we kind of stopped doing what we were doing because there was a little bit of a risk associated with it. But yeah, ended up moving back to Australia after the research role. It was through my university, so working with a Chinese company there. And when I got back, I met some guys and they were starting a crypto investment fund. And they were one of the first groups in Australia with Australian Financial Services Licence, which is what you need to run a regulated investment fund here in Australia. And met them at a Bitcoin meetup, which is pretty funny. Yeah. And Bitcoin meetups were pretty wild back then in the bull market in 2017, 2018. And told them about the sort of trading I was doing in China, and they offered me a job. And I thought they were joking initially, and they're like, one of the guys said, "You start Monday," and I'm like, "Oh, this guy's not serious." So about 3 months later, I ran into them again, and I realized that he said to me, "Oh, you never showed up for work." And I thought he was joking the whole time. So I ended up going to work for these guys that started an investment fund, just trading or investing in cryptocurrencies, into the big ones like Bitcoin and Ethereum and the ones that we know of, but also investing in smaller startups, like new companies using the technology. And then, I was in it full time. I was getting paid to do it. And things kind of, again, snowballed from there and just got deeper and deeper down the rabbit hole.
Yeah, awesome. And that's how you got to where you are?
Yeah, pretty much, yeah.
And is that job you've got the current job you have?
No, so at the moment, I'm the CEO of a company called Bamboo, and Bamboo is a micro savings and micro investment platform. So we we round up people's spare change. So when you make a transaction, such as buying coffee or buying petrol, you can denominate for us to round up your spare change to the nearest dollar, and we invest that into cryptocurrencies. Now, it's similar to Raise or Acorns, but we have a diversified portfolio of different cryptocurrencies. And what it's kind of analogous to is we used to have a pocket full of spare change before we used PayPass all the time. And we would come home and we would put our coins in a tin or in a money box. And at the end of the month or at the end of the year, we'd have enough to buy a new TV or go on holiday. Yeah,
and it'd always surprise us with how much we have.
Yeah, exactly.
Because it adds up over time.
Yeah, and you don't notice it because it is your spare change. So this is like the digital version of that. So it's the same mechanism, but it's a newer version. It's the digital age version.
And I mean, that's why I kind of wanted to have a chat, because I love that strategy. Even if we remove investing aside, just that as a saving strategy is really powerful, because as you mentioned, this app is a savings app.
Yeah, exactly.
And investment app.
Yeah, there's actually a name for this investment strategy, and it's called dollar cost averaging. So instead of vesting $1,000 at a time or $100 at a time, you're kind of susceptible to the market movements. And as we know, Bitcoin and cryptocurrencies are volatile. They're going up,
ridiculously,
they're going down.
yeah.
And not even the professionals can time when to get in at the bottom and when to sell at the top. But a statistically proven strategy is buying small amounts over an extended period of time. And they call this dollar cost averaging. So you're getting average price in the marketplace. And this is kind of what people get with their superannuation. They're averaging into the market over 40 years. So they're getting average price and they're betting on the economy going up.
And basically, I mean, I think Tony Robbins in his investment book I was reading said that S&P 500 has gone up by 10% on average over the past 100 years.
Exactly.
So if you just invested long term, you would have had an increase of 10%.
Exactly,
and,
yeah.
you know, once you add compounding interest on that, that can be massive over 40 years. Obviously,
Exactly.
there's years where it goes down and years where it goes up, but on average, it's 10%.
Yeah, no, it's really good. And it's almost like a foolproof way of investing into index funds and across whole markets. And then if you couple that with averaging in, I think it's a pretty safe way of investing.
Yeah, and it's great because often when I speak to younger people who have very little money, they're like, I can't get into investing because I don't have any money. And you know, 18, 19, 20, however old, but this is a great way to do it because you don't need to put, as you mentioned, $1,000 into it. You just sign up and it just takes money out of your account by rounding it up. And so when you buy a $4.50 coffee, it rounds up to $5, bang, 50 cents gets invested. And so you kind of don't even notice it. It leverages Parkinson's law, which I mentioned earlier, which is, and I use this strategy myself. So when I pay myself a wage on Sunday, let's say I pay myself $1,000, I then automate $400 to come out of my account and go into my savings account. And so when I open my phone on Monday morning, I don't have $1,000 in my account. I've only got $600. Therefore, I'm going to figure out a way to live off that $600.
Yeah, no, it's a really strong strategy, and I think everyone should do that.
Yeah, 100%. I highly recommend that. But that's why what's it called?
Dollar cost averaging.
Yeah, it's a great thing to look into. Research it more if you want, guys. But let's switch gears and let's go back to the fundamentals. Like, what is Bitcoin? What is cryptocurrency? Because quite honestly, I'm not even too sure. It's super weird. It's this, volatile. It's up and down. There's all these, fancy words being used. But what actually is it?
Yeah, there is a lot of jargon, and we'll try and keep outside of that.
Yeah.
But yeah, it might be helpful to start with where Bitcoin started and why it started, to provide some foundation or a bit of a framework to explain how it works in a bit more detail. So back in 2009, there was a group of people called the cypherpunks, and they were anarchists, they were economists, they were but primarily cryptographers. And they saw a lot of problems in the traditional financial sector back in 2008. With the global financial crisis. They could see that Wall Street and the banks were, not putting their customers' best interests at heart. And they wanted to develop a technology that allowed them to trade value outside of the traditional financial sector. And, their ideology was warranted at that time because, we could see massive bailouts of the bank, no one going to jail for all these horrible things that they...
Wolf of Wall Street sort of thing.
Yeah. They're just screwing the consumer. All right, so these guys put their minds to how do we make a digital money, right? And the problem was that when you send something on the internet, what you're essentially doing is making a copy of something. So if I send you a meme of something, then I have the meme and I made a copy and I send it to you, so we have two memes.
Yeah.
So this doesn't work really well for money. Because if I send you $1 and the money doesn't follow the transaction, we have $2 then.
Yeah,
so
and
that's redundant.
Multipliers.
Yeah. So what these guys did was they solved the double spend problem, right, on the internet. So they used some fancy mathematics and cryptography to tie the transactions together, so you could track the transaction as it moves around the internet. And they call this a digital ledger. So each transaction was a line item in the ledger, right? So you could follow it all the way back to the first transaction, in theory. And this was a massive revelation, and it was founded by a guy named Satoshi Nakamoto. I don't know if you've heard this name before, but this is a Japanese name, but no one knows who he is. He was on some early chat rooms, and he talked about this system that he had developed that he called Bitcoin, and he released a technical paper about how it works, how it functions, and they deployed it. They built it, and it started off at, fractions of a cent, it didn't even have any real world value. It was more of like an experiment, like a theoretical thing. But over time, people started buying into this ideology that, hey, maybe this money that works outside the traditional financial system is something that's valuable. And over the last 10, 11 years, it's been gaining momentum and it's evolved, and we've seen new cryptocurrencies and businesses and banks and investment funds all start gravitating towards to the value of this technology. So it's been an interesting journey, and it's a fascinating space once you learn how it works, and it's a bit of a rabbit hole.
Yeah. Okay, cool. So that's the story of crypto.
Yeah.
Now, what is crypto? So we just mentioned it's kind of like a digital currency. That was a cool thing how you mentioned it doesn't duplicate itself, so that we can track it back. So why would we want this in the world? Why do we want crypto? Why is it important to, I guess, the future of where we're heading?
Yeah, good question. So crypto was mainly built to be a money for the people that worked outside the traditional financial system, right? So what we're seeing at the moment is governments, they're printing trillions and trillions of dollars, which what that does is inflate the currency. And an example of what this does to the everyday person is if you have some money in your savings account and then the government prints trillions of dollars, the next day your savings are worth a little bit less because it's being diluted.
And over time, that adds up.
Man, it compounds. And the people are starting to see this trend accelerate, and people are looking for alternatives. Companies and institutions are also looking for alternatives. We've seen situations where there's been hyperinflation. Governments, in Africa and even in Turkey are just printing money, and people looking to hedge out of the economy. And what's interesting about cryptocurrency and Bitcoin is that there's a fixed amount. So this can never happen. We can't just print more Bitcoins, there's a finite amount. So it means there's a scarce supply. There's not that many of them. So people are collecting them, and then that in turn creates the value to go up. And I think last year alone, 22% of all US dollars were printed. And at the end,
22%.
22%, yeah.
In 1 year?
Yeah, in 1 year. That's how much debt the US government's going into.
Oh my God.
And if the next stimulus package goes in, it'll be a total of about 40% for the 2 years.
Wow.
So, this is, heavily diluting the people's savings and money. So people are looking for an alternative. People want to hedge out of this economy. So we've built a product that allows people to do this simply and easy. In 90 seconds, you can sign up and hedge out of what's happening, these macroeconomic effects, right? And you don't even have to think about it. It just happens in the background. It rounds up your spare change. But then it's kind of like a bit of insurance or a bit of protection around what's happening in the wider economy. And if, all these large companies and institutions start doing the same thing, it's going to be really interesting because they're going to be putting hundreds of billions or trillions of dollars into this asset class, and there's only a certain amount of them. You can't print anymore, and this is why a lot of people are speculating, because these groups are starting to move into the space.
Yeah, so would you say that's a big differentiating factor is there's only a finite amount of cryptocurrency or Bitcoin versus cash or currency where they just keep putting more and more into the economy.
Yeah.
And when we say printing, we don't mean it's at a press being printed. We mean it's adding zeros into a bank account.
Yeah, that's right. They're printing money and using it for things like tax breaks and buying bonds. It's a pretty wild thing they're doing. It's really unprecedented. This hasn't been seen before. And who knows where it's going to lead. But people are used to, when these things happened in other economies, they would generally hedge out into gold or into silver because this was seen as a safe haven for their value.
Well, we teach us at Empower You, the company I was telling you about off camera. When we do a money and finance section, we just say, gold and silver is a hedge against inflation.
Yeah. And
I know people who not only do they invest in gold and silver, they physically buy it.
Yeah.
And they have a safe.
Exactly.
They'll go out and buy a chunk of gold or a chunk of silver, and little nuggets of gold, and things of silver, and they'll keep that in a safe because that's tangible. You can't just print more of that.
Yeah.
And as you mentioned, I think there's only a certain amount of gold in the world as well.
Yeah, that's right. So gold's worth about, I think, $9 trillion, all of gold. But Bitcoin, and gold's not that useful for anything. You put in your safe and it stays there. It's a hedge, but Bitcoin has very similar qualities to gold, but a digital version. So people are using it in the same way that they use gold as a store of value and a hedge against the economy. But you can use it to, purchase everyday things, to transfer value to, your family overseas very quickly and easily. So it's a bit of a paradigm shift in thinking from physical gold to digital gold, but it is a shift that's happening.
And these are definitely things I think people should be looking into. Even if just start looking into it, educating yourself around crypto, around gold and silver and these sort of things, because they could, they're they're future sort of thing. And when we're looking at, you're saying 40% of the American economy could be have printed their money in the last 2 years.
Yeah, that's right.
That is massive. I don't think how much money is that? That's going to be trillions and trillions.
Yeah, it's trillions and trillions of dollars. I think the total debt in the US is 35 trillion, but they printed several trillion in the last year. Yeah. So it's really interesting, and people are hedging out, and companies are hedging out. So because they can't trust the government to protect the value and manage the economy effectively.
Is also a fact that banks aren't really innovating and are very slow and annoying to use.
Yeah.
You get on the phone and you got to come into the bank and we'll do this. It's you got to make me come all the way in, show you my ID or something just to get one thing done.
Yeah.
It's so painful. It feels like banks haven't innovated in the past, 50 years.
Yeah, I think you're right. A lot of what this technology is doing now is replacing what banks do. Traditionally, we would use banks to transfer money, but now people can do that themselves with cryptocurrencies, Bitcoin or Ethereum. People get loans through banks, but now what we're seeing is people building this type of technology on top of the different blockchains, or building businesses to loan crypto, where you don't interface with anything. It's all driven by code. People are now getting a yield on their digital assets.
Really?
So in the same way that you would get a yield on your high interest savings account, you can get an interest on yield. So that's one of the things that we're currently implementing on Bamboo. So you'll be able to deposit, say $100 of Bitcoin money and buy Bitcoin, and you'll get up to about 4 or 5% yield per annum on that. At the moment, I think the interest that you're getting at banks is
terrible.
Around 1%.
1.5%, 2% if you're lucky. It's terrible.
That's right. So we're giving people a real alternative and access to what we believe is the new economy, and what's going to replace a lot of our legacy financial system are these blockchains and these new ways of doing things.
So as right now, as we're filming this, Bitcoin is ridiculously volatile, to the minute. And why would we want to trust something that's so volatile? I feel like if it's going to maintain this volatility, I can't see us using it as a currency, because 1 minute it could be 60,000, in 2 months' time it could be 40 or 30. What do you think that's looking like when it comes to?
Yeah, volatility has traditionally been a big problem. We can't use it for currency. It's seen as more of a speculation than currency, or a store of value, as opposed to a currency that we can do trade and business in. And this is mainly due to there being the lack of methodology to price something like this. Now, we haven't had something like this before, and we can value a business in one way, looking at its revenue, or looking, how much money it made last year. But valuing networks is done very differently, and maybe you would look at valuing it something more like Facebook, but this is money. So the growth potential is, I believe, much higher than money. And one of the other reasons that it's volatile is that there's the market cap, or the total value of Bitcoins isn't that high. It's $1 trillion. So compared to gold that's 9 trillion, or other asset classes that are even more, it means when people move money in and out of Bitcoin, it affects the price, because there's not that much of it. But if you're buying large sums of US dollars and selling large sums of US dollars, it doesn't actually affect the price, because there's so many of them, right? But because there's less Bitcoins and the value is relatively low, there's that volatility. But over time, as we see the value increase, we will see less and less volatility. The more volume that's moving through the network, the more people that are trading, the more people that are using it. So it's self-fulfilling that it will become more usable the more people that use it.
Right. Do you think it ever hit a point where it just maintains one price?
Yeah, well, it will reduce its volatility to a certain extent, but similar to gold or the Australian dollar, it's always susceptible to volatility.
Right, because
Yeah.
at one point the Australian dollar was at like $1.10
Yeah.
to the US dollar.
Exactly, yeah.
And now
yeah.
it's we're sitting around 75 or something. I'm not sure.
Yeah, it's still going to be volatile, but it's going to be a lot less over time.
Yeah.
Yeah.
So do you think you can see a world where the world is all one currency, which is crypto or Bitcoin or something, and it's significantly less volatile, and when you're in a different country, we don't need some fancy app that's going to make us pay fees to transfer it. We just go bang, Bitcoin, I'll give you this much, and we just transfer instantly?
Yeah, exactly. So, and it's certainly the case that it may not be Bitcoin. The good thing about this technology is no one owns it. It's open source. So if someone wants to build another platform very similar to Bitcoin, but that's made specifically for payments, or one that's for, building apps and messaging apps on top of, that's possible, and that's what we see out there. So it's quite confusing when people look up cryptocurrency and there's a million of them, or thousands of them. And they're like, what's going on here? What are all these doing?
And there's Dogecoin.
Yeah, Dogecoin as well. And everyone has their own version of utopia, or what they want to see in the world, and people are creating them. And because this is open source, it's relatively easy to copy other blockchains like Bitcoin and make their own version of it. And I do think that one day that our whole financial system is going to be built on this technology, because it creates possibilities that just are expensive and slow at the moment, but are very easy and cheap as we move over to fully using this.
Yeah, I think it also gives people who are, in a lower socioeconomic place, so to speak, a better opportunity, because this country, as you mentioned, like Africa, where the banks aren't very safe. It's like people don't want to put their money in the banks, but they have to because they need to put it in there, and there's only limited options. And so by having this technology, there's a lot more freedom. Yeah. And people can maybe break out of it because they're not as trapped.
Yeah. It creates sovereignty as well. You don't need to rely on the banker, or you don't need to have the risk associated with keeping cash under your bed, and it could be stolen. You could, in theory, keep the code of to access your Bitcoin in your head. So you could walk across a border with, $1 billion worth of Bitcoin in your head, and no one can take it off you.
Yeah.
And this is sovereignty of money, and we've never had that. At the moment, when we deposit money into the bank, it's not fully backed. If everyone goes to Commonwealth Bank to withdraw their cash, it's not going to happen.
Yeah.
It's because they're using that on the back end to speculate, to trade markets, to use it for lending, whereas this is a money for the people.
It's like a gym almost, isn't it? Gyms have way too many members to fit in the gym all at once.
Yeah.
They're betting on the fact there's only going to be a small amount of people going to the gym at once.
Exactly.
Banks are betting on the fact that not everyone's going to go to the bank and pull out their money at the same time.
Yeah, exactly. I think it works like that. And so it's a different way of doing things, and one that I think that we can trust more. Recently there was the Royal Commission, and the fines that they needed to pay as a result of the poor behaviour they raised from shareholders and elsewhere, just to pay off the fines, so it didn't affect them in any capacity. And when this behaviour seems to be systemic, and it happens not just here in Australia but all around the world, in Wall Street, and people are looking for an alternative. People don't want to have to deal with this. When you're
sick of it.
Yeah, when people are dealing with their hard-earned money, they want it to be safe and secure, and that's why I think Bitcoin has gained so much popularity over the last few years.
I think it's. Do you think if what we're saying happens in the future, larger companies are going to take a hit, but the average day consumer is going to be better off?
I think everyone, all sorts of people are coming into this. You're getting everyday people, you're getting tech nerds, you're getting young people, you're getting old people. But companies are starting to realize that, hey, we're holding $100 million in cash in US dollars or Australian dollars. And they're like, well, what happens after this quantitative easing? How much, after the government prints this money, how much is our treasury? How much are our savings worth? And we're seeing companies like Tesla be like, no, I don't want this. They're going to chuck in billions of dollars. And what we're going to see over the next few years is, potentially a large portion of the Fortune 500, the biggest companies in the States, the biggest companies in Australia, the biggest companies in Europe, they're going to start seeing the writing on the wall and realize that, if everyone else is doing this, they have to do this. They have to move a portion of their savings and their balance sheet into these digital assets as a hedge against what's happening. And I think it becomes self-fulfilling. Once we see one big group, two big group, three big group, it'll snowball. And, when you have trillions of dollars coming into something that's only worth $1 trillion, it's going to be really interesting to see how that turns out. And, if they want a small piece of exposure to hedge against, the macro, the larger economic things that are happening, apps like Bamboo, looking at exchanges might be a good option for those people.
Yeah. Awesome. And do you think that coronavirus has accelerated this push on Bitcoin? Because I guess what I'm hearing here is you're saying a big reason companies are wanting to get into digital currencies is because the US and Australia and companies are printing so much money, and they're printing so much money because of this pandemic. So do you think that's accelerated this kind of journey?
Yeah, it certainly has. And I think a big part of it as well is what are people doing with the stimulus? A lot of people are buying crypto. So not only on one side are they diluting the currency, on the other side, people with that currency are hedging out and buying crypto so they can get a piece of the upside. So people like this, have done quite well. And, if another batch of stimulus comes through, multi-trillion-dollar stimulus, and everyone in the US gets a $2,000 check or whatever it is, it wouldn't surprise me if quite a few people start buying Bitcoin and Ethereum with these checks. So yeah.
Well, I also know people are dropping it on drugs and stuff as well.
Yeah.
So it's like, there are people who are doing smart things with it, and then people who are doing dumb things with it.
Yeah.
And I think actually, the average people are just, from what I hear, aren't spending it that wisely because I've got this money coming in, and because obviously the government's giving it to us so we spend it and stimulate the economy. People are going, all right, I'll stimulate it, and I'll just go buy some stuff.
Yeah. That's pretty funny. Yeah.
And then you've got people who are investing it, and so there's a big variety of kind of what's happening with these stimulus checks around the world.
Yeah, no, for sure. And people are spending more time in front of their computer screens. They're
100%.
educating themselves. They're reading more, researching more, watching more YouTube and TikTok, and learning about these topics. And there is an education piece. People need to learn about what it is and what it does and how they can use it. Before they start buying it. And so it takes, it's going to take 10 years for a cultural shift, but it is happening, and it will happen.
Yeah. I think a big thing here is obviously there's only so much we can do in a 45-minute podcast, but I think just by raising awareness and kind of flicking the switch in people's heads, they go, all right, these guys were speaking about crypto. Some of it went over my head, some of it I understood, but now I'm aware that it's, it's kind of hitting. I can go do my own research. I can go look into it. I can watch some YouTube videos. I can dive a bit deeper into this world and this rabbit hole, which is what I've kind of been doing lately, and really just have some fun with it and see where it's heading.
Yeah, for sure. Yeah, no, it's a really good idea.
Yeah, I think it's really important. So we've got companies like Tesla, who, as we mentioned, have just put 1.5 billion into this, and so you're saying that's a big sign that this is on a massive upward trend.
I don't know whether it's going to go up or down, but what I can look at is the fundamentals. And we're seeing companies like Tesla and companies like MicroStrategy in the US put parts of their savings into this asset class. And my hypothesis is, and others, is that others will do this. Not just a couple of others, but, hundreds of others over the next few years. So if that happens, then yes, the price will probably go up. But, at the end of the day, it's still a speculation. We have to believe in this ideology and believe, that this is a hedge against, quantitative easing or money printing, for us to buy into this investment or saving strategy. Yeah.
And so if this does, I guess, become a bit more normalized over the next 10 years, what does that mean for the governments who are printing money?
Yeah, really good question, actually, because what we're starting to see is other governments create their own digital currencies.
Oh, really?
Yeah, so countries like China are going to issue a digital yen, right? And the euro has explored it, and this makes it very easy for these governments to track what people are doing with their money. And what this technology allows for is for rules and regulations to be coded in to the money, right? So if I create a transaction from me to you, and on a digital ledger that's created by the Australian government, they can write in that, hey, when I send some cash to your company, you need to automatically pay taxes, and that will happen. The code will distribute that to that'll distribute it to the A2. And then say you have a couple suppliers, right? And where you get your camera from, or where you pay rent, and then you can have some code that automatically distributes that to so your suppliers and to your landlord, right? So what we're going to see is automation of large parts of our economy. So in the future, it may be the case that the ATO isn't a group of people sitting in the building in Sydney. It could be a suite of code that runs across the network that does the auditing to find out whether you've paid your taxes or not.
Wow. That's awesome. I would prefer that. Taxes is such an annoyance.
And people don't know the rules and laws about if it was all automated, which eventually it will be. This creates a situation for it. And what we're also starting to see is, they call it smart contracting. They build this code that they put into the transactions. They call it smart contracting. And people are starting to do this with loans. Say you loan me $100. And then every week I have to pay you back $10, right? They can build that into the code where it forces me to make that payment. And if I don't, penalties are automatically coded in.
Wow.
Yeah, so it's very different to a bank because generally this would have to go through a credit. I'm sure it's automated to some extent, but there are people involved in that system. But this is not reliant on any individual or any organization or any company. It can be baked into the system.
That's amazing. Because look, I'm totally fine paying taxes. It's just when you run a company, it's so there's no clear thing you have to do. You've got to go, okay, I've got to take 30%. You've got to do it all manually. And it's super annoying. And then you come to your tax bill at the end of the year and you've miscalculated it and you owe extra $5,000 or something. Whereas if it was just all automated, as you make payments, it'd make life so much easier.
Yeah, no, it's really interesting. And, what we're seeing is lots of the large auditing firms, the big accountancy firms looking at this technology and how they can automate parts of what they do. And they're already building systems and software to allow their customers and client base to be able to use these systems.
Well, this is kind of what I was talking about earlier on, how I use my bank. I just set up an automation in my bank account. So as soon as I get paid, a portion of that goes into my savings.
Yep.
And then with my company, as soon as I get paid, I can't automate it because I get paid different amounts every time. But let's say I was earning $1,000 every week with the company, I could just automate stuff going into my tax account. Yeah. But with this, it's just bang. You don't have to set up any automations. It's just instant.
Yeah. So this has its pros and its cons. When governments can have the all-seeing eye and seeing every transaction that you do, and they can track what you're doing with a piece of code. A lot of people get a little bit worried about this.
For sure.
Particularly the Chinese government. But it also makes for easy and quick transactions. But I think this is never going to replace crypto and Bitcoin. It'll run in parallel, but it will be built on the same technology. And
that's the currency version, I guess.
Yeah,
like a crypto yen or a crypto euro or crypto US dollar or AUD.
Yeah, so people, eventually what they're going to try and force us to do is go cashless so that they can gather all the taxes through this technology.
Wow, okay. Yeah, no, that's super cool.
Yeah.
This has been really cool. I've learned a lot.
Yeah,
I think it's been a lot of fun. So one final question before we get into a little bit more about Bamboo.
Yeah.
And I ask every guest this question. It's basically, what would your number one piece of advice be for the younger generation? Doesn't have to be finance related, just, any piece of advice that you would give the younger generation?
Yeah, for sure. So it's probably in two parts. The first one is, when I finished uni, I didn't know what I want to do. I was looking for jobs in the industry that I trained in and couldn't find anything that fit with who I was or my personality or what I wanted to do. It turns out that I wanted to do something more entrepreneurial, and I didn't know it at the time. But I took a risk. I started working in digital assets and with cryptocurrencies and trading them and immersing myself in this space. And there's a lot of volatile. There's good times, there was bad times, but I was able to do what I wanted to do. I didn't need to work for anybody. I could learn at my own pace, and I felt like I could be myself. So, even though it was risky, it turned out to be the better option.
Yeah, which is a key word there, risk. Yeah, risk comes up in almost every single conversation I have on this podcast. Like, now is the best time to take risk while you're young. Yeah. So if you're young, going, what do I want to do? Because had you not made that decision, even if you failed, at least you would have learned some stuff in the process. And now you know that wasn't supposed to work. So, the worst thing you can do is when you're on your deathbed is be full of regret of stuff you didn't do.
Yeah, I think you're right.
And so taking risks while you're young, when you've got no kids, you've got no responsibilities, essentially. And so if you fail, you're not going to eat it like someone who's got a car, family, parents, kids to look after.
No, you're exactly right.
It's such a great time to take risks.
Yeah, I think that leads into the second part. What I learned as well is not putting all your eggs in one basket. I saw a lot of people, they put too much money into crypto or too much money into something else or too much time. But, when you're spreading yourself a little bit more broadly and, putting your time into different things, that creates less risk. And, what you don't want to end up doing is, one of those things, crashing like Bitcoin did. And a lot of people ended up worse off than when they started. But, if people are incrementally entering the markets and exiting the markets, then it does mitigate a lot of those pieces of risk.
And stuff like Bitcoin is such a bright, shiny object, right? So some people will see that and go, oh my God, look how much it's worth now. It's just going to get higher and higher. I'll put a ton of money into it now, make a big risk. It could pay off. It might not. Yeah. Who knows?
But it is very, very risky.
Yeah. And as you said at the beginning of this episode, even the professionals have no idea if it's going to go up or down.
Exactly.
So how could you, an everyday Joe, possibly know?
Yeah, exactly. Yeah.
Anyways, dude, thank you so much for coming on the show. If people want to find out more about Bamboo, check out the app, start kind of dipping their toes in the water, where's the best place to go?
Yeah, check out our website. Our website is getbamboo.io. And you'll be able to search us online. But hit us up on socials as well. And thanks so much for having us. It's been great.
Pleasure. And it's just an app on your Apple or Android, right?
Yeah, check it out. Get Bamboo on Android or the App Store. So
thanks so much for coming on the show.
Awesome. Thank you.
That's it for this episode of the Driven Young podcast. Thank you so much for listening to the entire episode. That means the world to me. And if you got some value out of it, please shoot me a message on Instagram or reach out to me. Or I would love for you to leave a rating or review on this podcast. So make sure you are subscribed, and I look forward to seeing you on the next episode.